All right, thanks a lot, Derek. And money news this morning, the stock market returns to pre-recession highs with midterm elections over. What can you expect in the coming months? Financial planner Stewart Welch joins us this morning. He's been looking at this. It's good to see you as always.
Good to see you, Rick.
Okay, I mean, last week you hit two-year highs just before the downfall, of that October of 2008, that September-October of 2008 period. All of that was kind of building up. It's been a good year so far for the stocks.
You know what? It has been a good year. It's been a little bit surprising.
A lot of folks said, though, that investors are sitting on the sidelines still waiting to see what happened with the midterms. This has happened, so what happened? Where do we go from here?
Well, I think so far the market has been ruled by fear, and some of that fear is beginning to dissipate. And part of it is that with the midterm elections, what you've really created is gridlock. Mm-hmm. And gridlock is generally good for the market because from a business owner's perspective, they know that nothing radical is going to happen. Mm-hmm. Everything that's going to happen is going to move very slowly and very deliberately. And so that's really a good thing for them. So I think it frees them up to begin to execute on their plans for expansion or whatever they're going to do.
Kind of the old idea has been, the old adage has been that uncertainty is not a good thing when it comes to stocks and the markets in particular, right?
And that's because what a corporation will do in uncertainty is they'll begin to hunker down. And the way you hunker down is you begin to cut expenses and store cash, which is exactly what they've been doing.
Okay, with corporations, with companies out there looking at uncertain or looking at gridlock perhaps for the next couple of years, let's take a look at investment options. You say invest in blue chip stocks right now. That's a good.
I think the blue chips are going to be the sweet spot. So right now, if you buy a basket of blue chips, you can get a yield of around somewhere between 4 and 5%, which is an excellent yield compared to what's going on in the fixed income, whether it's bonds or money markets. And so when investors move away from fear, they're going to look and see that they're earning 1 or 2%, and where can I get a higher yield that's safe? And the safest place to get a higher yield right now would be blue chip stocks.
Okay, let's talk a little bit about small company stocks as well.
Well, small companies, the advantage of small companies is they're very nimble. So they'll have the ability to move very quickly and to execute on resources very quickly. The downside on small companies is that the banks still aren't lending money. So their access to capital is going to continue to be constrained, and it may constrain them. I think maybe the blue chips is going to be the sweet spot. Outside of blue chips, probably the best opportunity is going to be in the emerging markets. And that's going to be, the China and the India and the Brazil and Russia. Those emerging markets are going to be a big opportunity because they didn't get the hit that the U.S. and Europe got.
Yeah, we look at where the president is this week, or where he just left, was
That's
India
exactly right.
in particular, reaching out, trying to strengthen those ties with India as an ally, looking at that as an emerging market, and where a lot of investment could take place, and a lot of investment could come from there and
That's
come
exactly
here.
Right. They're a huge opportunity, and I think we're going to really see that flourish over the next 2 or 3 years.
All right, Stewart, it's always good to see you. Thanks so much for being with us today.
Thanks, Rick.
More to come on Good Day Alabama. Advice for pet